So yes, dear students, I believe you will be fine and enjoying good health. Today our part number 6, fixed assets and depreciation, reducing balance method with example. So let's start our topic. So this one lecture is about reducing balance method. I have explained this method with the example. So let's start. So first of all, we should understand how to calculate the rate. So let's suppose example, cost of an asset is rupees 200,000, its residual value rupees 20,000 and its expected life 5 years. So let's suppose what is the formula to calculate the rate. So first of all, 1 minus nth root of residual value over cost. So what its residual value? Its residual value is rupees 20,000 divided its cost 200,000. If we simplify it, we obtain this figure and let after classify. So then we take its exponents, and when we take one exponent we obtain 1, and when we take 10 exponent 1 over 5 we obtain 1.5, and 1 after that we divide 1 divided 1.58 and we receive 0.63, and when we minus 1 minus 0.63 we will be obtain 0.37, and after that 0.37 multiply 100, and at the end we will be obtain 37% rate. So this is the process of how to calculate the rate for reducing balance methods. So in this table I have explained fully with workings so that you can understand easily. So this one is the narration: depreciation, cumulated depreciation, a written down value. So what is depreciable cost or historical cost or purchasing cost or carrying values? These are all synonymous words. So it's written down value 200,000. So in the first year, what is the depreciation? So whenever you take 37% of the 200,000, its amount will be 74,000. So whenever you minus 200,000, so this one is your 126,000, it's your written down value. So you write in this column. In the second year depreciation you will charge 126,000. So here is a mistake, 126,000 multiplied 37%. So the next year depreciation will be 46,620. So you add 74,000. So this one 120,620 is your accumulated depreciation, and 79380 is your written down value. So in this series wise you will chart depreciations, and at the end of year your written down value is 919849. So this one is the accumulated depreciations. I have explained in the previous slide how to calculate the rate. So I believe that through this lecture, through this topic, through this tutorial, your all confusions regarding to the reducing balance method will be cleared. If you have further any queries regarding to your depreciation matter, you give your feedback through comment sections. Thanks again.